Hey guys, we had a great morning in the first hour trading pit. Today it was not very exciting. There wasn't a whole lot going on, but what was going on was certainly well within the bounds of what we would call predictable behavior on the part of some of the core stocks that we trade. For those of you who are new, I just want you to sort of look over our shoulder and try to take it all in this week. It's a little bit different than the style of trading that some of you are familiar with. A lot of you have come our way from some of the open outcry rooms and places where they do a lot of very sort of hyperactive trading. That's not what we're about. We're about getting in front of real solid opportunities and trading them each and every day and just making sure we stick to a set of rules and that we know exactly why it is that we're doing what we're doing. So with that said, let's take a look at a couple of the trades that happened today and sort of what the logic was for getting in and out of those and what the results were. And we'll start by taking a look at Apple. All right, here we go. This is our Apple setup from this morning. And you can see that prior to the open, we had a pretty significant gap higher. We had some out-of-market prints, stray ticks, or well, actually just out-of-market prints on this one. But you could still go through and identify some very clear bands of support and resistance that made sense in terms of where we were going to want to place our entries and our targets based on what happened in the pre-market. So right off the opening bell, we had this shot down to our 119.40 line. Julie had those drawn on the screen in the first hour trading pit as well. And that then gave us the opportunity for a trade to the long side from 119.40 up to 120.45. So it's not that frequent that we're getting those dollar moves right off the open on Apple anymore. Now they're more like 50 cents, 40 cents, right? Sometimes there's as little as 20 cents. But this morning, all the pieces were in place, and we had that nice little ricochet move up higher. The next place you should have focused your attention was on this reversal bar right here. This is an infield fly setup, and it gave us an indication that we were going to come back down into the range. You could have taken this one and targeted 119.74. Of course, there was no cigar there, right? This one reversed. And really based on the move in the morning, what you wanted to do was take a look at the retracement lines. And what we saw here was it gave us an opportunity for a 50% retracement entry, a little bit of a dip below there after the trigger. But then we had a nice move from 120.12 up to 120.64. That was the target. We called that live in the room. And then over the course of the rest of the morning, really what I was doing was trying to focus my attention on pattern trades. So you heard us talking with Joe Dan in the first hour trading pit. He was asking questions about when these patterns set up. And there were several nice opportunities in Apple this morning. This infield fly setup right before the New York lunch was the last one that I was interested in. So it happened 11:40 a.m. Eastern time. That bar gave us a real clean infield fly setup. And what you could do here was you took that 123.04 level and your logical profit target right here at 122.40. So pretty decent move. A couple other ways that you could wrangle this in and figure out if it was worth trading is looking at the big picture move. Right, big picture move would have got you down to 122.20 on a retracement. I still, when I see this kind of volume right here, I'm not going to look to get through that level. I'm going to try and get out at the volume by price node. But in this case, it would have predicted a little bit bigger of a move down. And then, of course, the other thing you want to do is focus your attention on the tighter moves. So in this case, we've got a nice little fib retracement here that would indicate that 122.63 is the 618 retracement of the small move. And then you'd want to go back and check for this one, and that gives you a 122.34 confluence level right at the target that we picked for the trade. Now let's take a look at those scalper setups from this morning. Monday morning, bright and early, BABA, Tesla, everything gapped higher. So we had to do a little bit of re-engineering, if you will, on how we were going to handle those trades. Now we talked in the room quite a bit about when you take a Tesla trade, when you take a BABA trade. Is that something that you want to do right off the opening bell? My answer, of course, was no. I don't like those off the open, as you know, because the spreads get kind of crazy. So how do you go and gauge whether or not it's a good time to start trading on some of these other stocks on the scalper setups. My bias is that we want to wait about 10 or 15 minutes for Tesla at least. We want the spread to tighten. Want to see a spread maybe 15 cents, 20 cents at the outside, not those dollar spreads we see right around the opening bell. Same deal for BABA. Want to see it settle in. Those are going to tighten up as well. They're misrepresented a little bit in terms of the magnitude of the spread, right? The Tesla is a $400 name and is trading with sort of the same spreads as BABA can look deceptive sometimes. The reality is where you really need to focus your attention is on the bid to bid spread and the ask to ask spread. You want to make sure if you've got a 40-cent spread bid to ask, you want to make sure you don't have a $1 or a $2 spread down to the next layer of liquidity on either side of the book. That's how you wind up getting trapped. So with that in mind, let's take a look at BABA. BABA always makes for some interesting trading, and what we saw this morning was a gap move to the upside. So once you have a market that's net positive and a stock that's net positive and you're positive on the session as well, you're not dipping back down into the range, pretty much what you want to do is focus your energy on the long side of the market. By the third bar this morning, we had a nice sort of pullback move in BABA that gave us a nice 1, 2, 3 stair step. That gave us an entry threshold right above this bar with a target back up at the open. So just think about trading this the same way that you would trade an opening gap trade. This was the first trade that we called in the room this morning on BABA, and really what this did was set you up for just a real nice 1, 2, 3 move. We got 302.69 up to 303.94. Yeah, it kept going to the pivot. We don't care about that. What we're really looking for is that opportunity, and when it did get to the pivot, the pullback down to 303.94 gave us another entry threshold. So we know this was support and resistance because of the opening tick and the way it pushed back in from the opening tick. And when it came down after having plowed through it the way that it did, the other thing that this should have alerted us to was this is likely going to be an uncle point, a spot where a lot of people who got short the open are looking to cover that position up. And in fact, we did have a pretty significant drive back from 303.94 up to 304.90. Then after that, I had numerous places that I was looking for something to happen on this one. This double header up here, this was a nice setup. Did not work out, of course. We were looking for a move from 306.82 down to 306.27. The reversal back up again to 307.08 took us out of that trade. So that was it for BABA for the day. And the next thing I'd like to look at is Tesla. So here's that Tesla setup from this morning. We were talking in the room about sort of things that are in the spirit of a setup versus things that are exact, picture-perfect representations of the way that I discuss these patterns and around the horn. And really, all this boils down to is you can see here that these 3 bars pretty much represent what would be called a double header. So even though on a daily chart we would want to see 2 bars line up and form that perfect sort of kings and queens or a double header setup, in the case of BABA or Tesla or any of these things that we're trading intraday, you have to bear in mind that the fact that you're using 5-minute bars versus 6-minute bars or 10-minute bars or whatever is going to make a difference that it doesn't really make on a daily chart. So when you're planning these things from a daily chart, the criterion are stricter. When it's intraday, I like to see things that are just sort of in the spirit of the setup, whether that be an infield flyer, a double header, backdoor slider, right? All those things set up a little bit differently intraday. They still make for very good trading opportunities, though. In this case, what you see is that after this, big constructive move to the upside this morning, what Tesla did for us was gave us here the opportunity either to go and just short below this bar 3 low, or if you waited for the double header pattern to form, then really what you were doing was going short below the second bar of the morning, 442.12, and your target, of course, was down at 439.81. Reason for the target is the pivot line. So once you see that you have this clearly identified objective there at that pivot, makes for a good trade. And then again, if you put the pieces together and you just sort of try to keep your eye on the ball here, then what you also should be tuned into is When you see this sell-off happen from this level down to here, then what you should be expecting when we get back up to the level that it's sold off from is that it's probably going to try to sell off there again. You got a very tight stop on that second trade on that one. Those are the only two that I had on Tesla for the morning. After that, we were sort of coming into the noon hour or the 11 a.m. hour here, and you had a very swift move back up to 442.12, and then up into this range. You could have had another resistance-based sell-off there, and it certainly did work out. I wasn't focused on Tesla at that point anymore, as happens to be the case a lot of times. You don't want to go back to the well too many times, or you're just focused on something else. I was looking at Apple, but if you're not really intensely monitoring what's going on, you don't want to just go and start firing off trades shooting from the hip. All right, so now let's take a look at our sinker setup from the trading plan today and take a look at what happened there. We had a couple questions this morning regarding the sinker and what it is and how it works and what makes it different than fastball. So for those of you who are trade secrets fans, that's where we introduce this notion of sort of a failed fastball. That was a book that was written all about the fastball pattern and the different dynamics involved in how that thing trades once it triggers. So the thing to remember about fastball in general is what you're trying to do with it is follow the footprints of institutional money. And a lot of times when you see stocks that are runaways, stocks that don't form the consolidations, don't form the pullbacks that we see on the classic fastball pattern, then what you're going to see is a big push of buying that goes into the close. And a lot of times that buying will represent some of the smaller players in the market. They're what you would call the nervous money. They're trying to hop on board of a breakout, and what they're hoping for is a continuation of that breakout the following session. So now wrap your head around the psychology here for a minute of who those people are and what it is that governs their trading. Because what they're seeing going into the close is the potential for a big push in the morning that's going to take that stock higher. When they don't see it first thing in the morning, that weak money is going to be the first to head for the hills, right? They're going to want to get out of that trade, because if they're wrong, they definitely don't want to stay wrong, and the best indication that they are wrong is that the breakout fails, that it can't push higher. So with that, let's take a look at the sinker pattern in action. And spoiler alert, this one didn't trigger the classic pattern this morning, but it did give us an entry opportunity just a few minutes into the session. So here it is. This was, of course, something other than a classic sinker setup this morning, but the way that you would look at it sort of later in the session is going to be the same way. So a lot of people are piling into this stock as the breakout is working this morning, and we get this sort of first level of resistance right around here, lines up with some volume by price data, and then we see that when we get into here, this is really where we're getting sort of our threshold volume, if you will, that tells us that we've got a plateau here as the stock is rising that's got a couple of different inflection points that we would consider significant. So as it went through these levels, we had all of this stuff form and tell us that these were going to be good levels to focus on in trading the stock. So what else do you want to look for when you're trying to figure out if you've got a reversal in place? Where do we want to see that price is hitting resistance and that maybe there's going to be some profit taking, some selling? This is a different psychology now, right? This is profit taking, and this is also people covering up bad positions. Because I will guarantee you that as this went and pushed to new highs, there were plenty of people who bought right there. And when that starts unwinding, when it starts moving back into the range, they're going to be looking for an exit point. And those stops are usually going to be pretty tight. And in this case, I would have been looking probably around that 54.50 level for an acceleration to the downside. Joe Dan again asked in the room if this here was sort of in the spirit of an infield fly, and I said it was, and that was definitely a tradable thing. So if you got in, if you got in anywhere from say 54.40, 54.50, all the way up to 54.65. Those were valid places to enter, and then your only question is where would you put the target. So when we were talking about it in the room this morning, I indicated that my target on this move to the downside, first target would be right there at that 53.55 level, and the second target down at 52.99. And the only reason I bring this one up is I hope that it wasn't confusing to people to sort of hear the trade reworked live and on the fly. And I know that sometimes when I just blurt out numbers like I'll look for 53.55 or I'll look for 52.99 as targets here, you might be saying, well, where the heck is he coming up with these numbers from? And really, it all had to do this morning, right, with this bracket of data here. You can see, that we sort of have a nice bell-shaped curve that wraps around this bunch of volume right here. So there was a good opportunity there for an entry from up above that would come down and inflect right there, and then we expected a shot back up to the upside, and that's exactly what we got. So it is not witchcraft or voodoo when we're talking about these things and predicting these inflection points. It's just sort of trying to understand the dynamic, the psychology of the participants in the market, and what's likely to happen, and sort of putting yourself on the other side of that psychology. So a lot of times I like to say, it's not intuition in the market that's going to help you profit, it is counterintuition. And with that, let's take a look at an extra inning, and then we will call it done for the day. So to further add to the confusion, you'll sometimes hear us talking about things called extra innings. This is in Julie's wheelhouse, squarely in her wheelhouse. This is something she likes to do. Every day we have setups. Every day we have trades that we're considering for the following day. And every day we have sort of leftovers from the prior sessions, things that didn't trigger but still look good, things that did trigger, maybe didn't make it all the way to the profit objective the first day, but still have an attractive setup for the following session. They just don't happen to be one of those around the horn patterns. These are things that Julie tracks, and she calls them extra innings. That's what they were called in Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. Extra innings was a chapter there about what to do with your secondaries, what to do with your leftovers. Well, Julie calls these out in the room, and when she's calling something an extra inning, that's all it is. It's a setup that didn't trigger yesterday or did trigger yesterday, but still has an attractive sort of price action going into the next session. She keeps those on her radar, and when she calls them out in the room, that's your heads up to take a look at what's going on with that stock. Let's take a look at AOS from today. Julie called your attention to this extra inning in the first hour trading pit this morning, and this had the allure of being, number one, an NYSE traded security, so we understand the price action on those very well, right? It's going to be very orderly trading. And it came down right on the open to a level that was a significant inflection yesterday and happened to be the central pivot today, and that's right here. So when she said that she was looking for a pivot trade on the extra inning in AOS, what that really meant was what you're looking for is the move down to that pivot then, and the opportunity to enter on sort of a check mark inflection, right? We're coming down and we're looking for that move back higher again. This was really good calling on Julie's part this morning. $57.11 the entry. She did not target that next pivot up above, which was ultimately where it went. She was targeting this support and resistance from yesterday, so the place that it turned around yesterday. So about a 43-cent gain there on that trade. Could have been more, could have targeted the 57.71 level. But again, when you're trading these live, it's not always so easy to go and just do everything on the fly. You have to go and set these trades up. She knew exactly what the parameters were that she was interested in. You set it up, you bracket the order up, you put your conditions out there, and you move on to the next thing. Let it take care of itself. The one thing you don't want to do is brood over your trades like a mother hen. That's never going to do you any favors whatsoever. Probably what will wind up happening is you'll second guess it after you get in and wind up taking profits out too early, or moving stops, or just sort of second guessing what your best interpretation was of what was going to happen. I find it's much easier to make good decisions when you take your time and think things through, and it's very easy to make bad decisions when you try to think on the fly or shoot from the hip. All right, so that is day one of the reviews for what happened in the first hour trading pit. I hope that you're enjoying your open house, or if you're one of our regulars, I hope that this is the way you looked at the market this morning, and we will see you bright and early on Tuesday.